All right, welcome back to another episode of Benjamin Explains Taxes. I don't know if anybody's interested or anyone is actually watching this, but I will try to explain taxes. On today's episode, we're going to start with residency audits. Now, I myself handle residency audits in New York and New Jersey, but most higher tax states in the union are very similar in how they audit residents that leave their tax states for lower income tax domains. So the simplest one being New York heading to Florida, or New York heading to Texas, or any other state that has lower or minimal tax. New York State, New Jersey also, California also, these are states that need money. And they also believe, because they are powerful states, they believe that no one ever wants to leave those states. And because of that, they have determined their laws that it is so difficult to prove that you have actually left your state for another state or country. You must change your residency and you must change your domicile. Now, in order to change your domicile, you actually have to make an active move to a different place that is going to be your new place of living. And in order to do that, it is not one factor or two factors or five factors that makes that determination. It is your state of mind. It is your state of being. It is namaste. According to New York State, that is actually how it works. You have to actually have in mind and prove what your state of mind is, that you decided to leave New York and go to a different place, and that it was going to be permanent and forever. And proving your state of mind is a very difficult thing. There are many different ways to do that. You can change your voting registration. You can change your driver's license. You can change where you go to church or synagogue, or where you put your kids into school. You can take your dog with you. You can take your children with you. All of these different factors are what is going to help prove what your state of mind was. But none of these factors actually proves anything. It is all of them together that gives the picture of what your state of mind was. And New York State will want all of it, and to tell a story of where you were. Now, on top of that, it's very important that you document everything. In a previous video, I talked about substantiation, and New York State is no better than any other tax agency. They want substantiation of your state of mind. So, moving costs, your records for travel, your new home's address and bills, all of these things you will have to show that you actually decided to pick up your life and move out of New York to Florida or any other state. And trust me when I say that New York has actually told me to my face in audits, no one wants to leave New York. Everyone loves it here. They are for sure coming back. So for all those people that left during the pandemic to different places for greener pastures, according to New York, you all want to come back. You definitely want to trade your 10,000 square foot farm that you've been living on this whole time for your 2x2 apartment on the Lower East Side or wherever you did live. So in the end, New York is very dogmatic about the fact that everyone wants to live in New York and they want to collect money. Now, what is the purpose of a residency audit? New York says even if you lived somewhere else during this period, during a tax year, you still owe them the taxes if you did not change your domicile and you did not change your residency. Now, we already discussed domicile. What is residency? Residency means that on top of just picking up your life and moving, if you left a little sliver of it here in New York in many different ways, you are still a resident for tax purposes in New York. Now, resident doesn't mean you actually live here all the time, but it means that you are here at least 183 or more days, and or you may have an actual home here in New York. Now, if you have a home here in New York that is not some sort of rented out home or a vacation home, but a place that you are here with for more than 183 days, you can be sure that New York will deem you a resident. So even though you have changed your license, and even though you have moved your children and moved everything that is near and dear to you to another place, you can still be deemed a resident for tax purposes if you are here physically in New York or have assets here physically in New York that point to the fact that you are somewhat living here. And if you are a tax resident, New York wants a slice of your income, and it wants a slice of your money, and they will try their hardest to get it. Now, in the current climate, being the fact that New York is so starved for money, as well as other states in the union that have had people leave during the pandemic and since the pandemic, New York is going to fight you tooth and nail. It's not going to be enough that you substantiated some of your claims. If there's even a kernel of a piece of you where New York says you've really left your heart and soul in New York, they will fight you tooth and nail and make it cost you money to the point where it doesn't make sense for you to do anything but at least settle and give them something. So it's not just enough when you move to actually have all of your ducks in a row, but at this point you have to be so tight on all of your situational substantiations, such as your ID change, such as where you spend your money and where you spend your time. But on top of that, there are apps out there that can track your movements. I know it's not something you want to do, but tracking your movements, tracking your flights, tracking your driving, you can be sure that New York State will check those things. They will pull your phone records. They will see where you were at different times, your Easy Pass, your tolls, where your car was, where your registration is. All of these things go into a whole bucket of substantiation that New York State will try to use to say that you left some part of you in New York that wants to stay here, and they will get that piece. So, how does a residency audit work? Very much the same as every other audit. New York State will send you a letter that says you claim that you left New York, prove it. And by proving it, they will give you a list of documents that they want you to send them. Where your kids go to school, where your kids live, what you've been doing, where you work. And all of those things go into an information gathering bucket that will determine where you are actually, in the eyes of New York, a resident and or a domicile. And this was a big problem during the pandemic because people were working remote. And that is not enough. The fact that you moved to a different state but are still working remote for your same company in New York under the same exact job and contract, if that's the case, New York will deem you a New York person because you never actually left your job. You never changed positions. You didn't reverse or revert anything. You are the same person that you were, you just in a different place. And therefore, you are a remote person that is working in New York and therefore subject to New York tax. So be very careful. Be very, very careful that you have all of your ducks in a row when you move. The biggest point that I have when people call me about moving out of this state is to be sure to document, document, document. You need to be your own big brother. You need to make sure that you have ticked and tied everything you've done for that year so that you can show that you are outside of New York and you have left nothing on the table. And with that, namaste.